gold, the shiny metal that's been a safe haven for centuries, has been taking a breather lately. After hitting all-time highs last year, prices have pulled back. Is this a sign of things to come or just a temporary dip? Don't hit the panic button just yet. Pullbacks are normal in any market, even for something as precious as gold. Investors shouldn't freak out. Instead, they should see this as a chance to understand what's driving gold's price. Remember, gold loves uncertainty. When the economy is shaky or there's geopolitical turmoil, investors flock to gold. It's seen as a safe place to park your money when everything else is going haywire. Right now, gold is stuck in a sideways trend. That means it's bouncing around within a specific price range without making a clear move higher or lower. This can be frustrating for investors who like to see action, but it's important to be patient. Think of it like a boxer feeling out his opponent. Gold is waiting for its next cue, its next catalyst to make a big move. Will it be a knockout punch higher or a technical breakdown? Keep your eye on those support and resistance levels. Support is like a safety net, a price level where buyers tend to step in. Resistance is like a ceiling, a price level where sellers come out in force. Technical analysis is like reading tea leaves, but for financial markets. It involves looking at charts, patterns, and indicators to try to predict future price movements. And right now, some of those technical indicators are flashing yellow for gold. For example, the MACD, a popular momentum indicator, is showing signs of weakness. That suggests the bulls might be losing steam, and the relative strength index, RSI, is hovering around neutral territory. Not exactly a ringing endorsement for gold bugs. But don't forget, technical analysis isn't an exact science. It's just one piece of the puzzle. You also need to consider the fundamentals, which brings us to our next point. Section 4, up and away. The bull case for gold. Despite the recent pullback and some shaky technicals, there are still plenty of reasons to be bullish on gold. Inflation is still a major concern. Interest rates are rising, and the geopolitical landscape is as uncertain as ever. When inflation rears its ugly head, gold shines even brighter. That's because gold is a real asset, a tangible thing you can hold in your hand. It's not subject to the whims of central bankers or the printing of fiat currency. Plus, when interest rates rise, it makes holding gold more attractive. That's because gold doesn't pay any interest. So when rates are high, investors are more likely to ditch their low-yielding bonds and park their cash in something like gold. Section 5, Uncle Sam flexes how US data moves gold. The US economy is like the 800-pound gorilla in the room. When it sneezes, the rest of the world catches a cold, and gold is no exception. Strong US economic data like robust retail sales or a booming job market can actually be bad for gold. Why? Because it suggests the Federal Reserve, America's central bank, might keep raising interest rates to cool down the economy. And as we just discussed, higher interest rates can put downward pressure on gold prices. On the flip side, weak US economic data can be good for gold. It could force the Fed to hit the pause button on rate hikes, or even reverse course and start cutting rates. And that would be music to the ears of gold bugs. Section 6, Expert Opinions. Wall Street weighs in. When it comes to gold, everyone's got an opinion. Some analysts are bullish, predicting gold will soar to new all-time highs. Others are bearish, warning of a potential crash. And then there are those who are sitting on the fence, waiting for more clarity. It's important to remember that analysts are just people, with their own biases and track records. Don't blindly follow anyone's advice, especially when it comes to something as volatile as gold. Do your own research, understand the risks, and make an informed decision that's right for you. And if you're ever unsure, don't hesitate to consult with a financial advisor. Section 7, Gold's crossroads, breakout or breakdown. So what's the verdict? Will gold break out to new highs or suffer a painful breakdown? The truth is, nobody knows for sure. But by understanding the technical and fundamental factors at play, you can make a more informed investment decision. If you're bullish on gold, you're betting on continued inflation, geopolitical uncertainty, and a weakening US dollar. You believe gold's safe haven status will shine through, and investors will flock to its safety. If you're bearish on gold, you're betting on cooling inflation, a more hawkish Fed, and a resurgence in the US dollar. You believe higher interest rates will dim gold's allure, and investors will rotate into other assets.